The information in this episode is current as of the date recorded and is not intended as financial, tax, or legal advice. You should consult your tax, financial, and/or legal advisors before implementing any transactions and/or strategies concerning your finances. And with that, let's get to this week's episode.
Hi, I'm Jason Nickerson, President and COO, and this is Financial Focus. On this week's episode, let's talk spring. Spring is sprung, and when we think of spring, sometimes we think of cleaning out, right? Spring cleaning. So let's talk about spring cleanup of our financial documents, especially now that the initial tax filing deadline has passed. We may have a new stack, a fresh stack of this year's tax return and work papers to file away with the prior years that we're keeping in our basement or attic or files elsewhere. However, we don't need to be keeping every year of tax returns. Certainly, we don't need to be keeping all these documents in paper. So with the expansion of various technologies and online resources, it has certainly made storage of our financial documents easier. Also, a rule that was enacted back in 2008 by Congress that made it mandatory for brokers and mutual funds to report cost basis, that eliminates some record keeping from our investment and financial statements in our filing cabinets. So let's talk about some of the good practices that you should be putting in place if you're starting to do some spring cleanout. I always like to start the discussion around tax returns. The tax return tends to be a financial summation of the prior year in the form of reporting income and deductions. How many years of tax returns do we need to keep? Well, straight from the IRS website, they say you only need to keep 3 years of tax returns, 7 if you had a bad debt claim or a worthless security claim. So start with that. Your tax return file should keep all of your work papers that were used to prepare the tax return. The other document that I would suggest adding is a year-end statement from your financial accounts, your IRAs, your investment accounts, and so on, so that you have a nice, neat package. Now, there are some other potentially taxable events that we get asked about. What about house purchase documents or house sale documents? What I tend to recommend to clients is keep your house purchase documents as long as you own the house. And then when you sell the house, if you sell the house, combine the sale documents, the purchase documents, all with that year's tax return to, again, create a nice, complete file. We often get asked, should I be keeping utility bills, cable bills, etc.? There really is no reason to keep those unless they are related to a rental property. And then you want to make sure you have a good accounting system that captures all of that information for your rental property. So now let's go back to the rule that Congress enacted back in 2008. Do we need to be keeping trade confirmations and statements proving our cost basis in our investments and holdings? Well, again, you don't need to keep all of those things because they would have been reported after 2008 through 1099s and broker statements. However, if you still have holdings in your investment accounts that date prior to 2008, you want to do one or two things, and maybe both. One, either keep the documentation still, or make sure the broker updates their cost basis records with the records that you have. So there you have it. There's potential there for you to clean out some financial statements and financial records and reduce the amount of paper you're keeping.